Ariel Investments Vice Chair Charlie Babrinskoy joins me now. Charlie, I mean, top level view of the market is how does it shape up for the year then? Welcome.
Thanks. We always resist making short-term predictions, but clearly there's out of favor sectors that are getting a new look. I would point out that large cap value has actually outperformed large cap growth year to date, not by a lot, and it's early, but we're off to a decent start. And so as people look around about where there is less risk in a risky, unpredictable environment, they are turning to some stable companies that are trading at reasonable prices and pushing back against maybe some of the very, very highly valued stocks.
You know, a lot of the sort of stable, we'll call it more lowly value stocks that you've liked are in areas which are right now in a bit of turmoil. Like I think of the energy space with all of these new announcements, the downward pressure on oil. So do you have to rethink kind of where you're looking for, the oracles of the world?
Oh, I'm glad you brought up Oracle, which is having a great day today, up about 5%. What's interesting in oil and gas is I think there's going to be a lot of drilling around the world, and President Trump has made it clear that he does not have the same leaning towards green energy that the past administration did. And so that's going to be very good for the service providers, the Schlumbergers of the world. We own a small cap named Core Labs, which is up a lot today on the idea that there's going to be a lot of activity. But you're absolutely right. Much more production could lead to lower prices, which would not be as good for the exploration and production companies, Apache, which we talked to you about so much in the past. So I would look to the service companies doing fine in this new environment. The more commodity dependent companies are going to be trickier.
Similar story for defense. I mean, again, how often do we see this under presidential administrations? The favored sectors do more poorly, the out of favor sectors, because that's how capital works, right? Like that's how it allocates itself. So on national defense, do you think we could see a similar phenomenon?
Yeah, this one is interesting. Elon Musk obviously has the ear of the president and believes in reshaping the military, less reliant on large cost systems like manned flight and more reliance on drones. That would put some pressure potentially on some of the larger contractors. But what we've learned is defense spending seems to only go one way, and that's up. Now, these names are not as cheap as they once were. So I own Lockheed Martin. And that's been a great name for us, but it is not anywhere near as attractive from a price point of view as it was, say, 5 or 6 years ago. Again, people have fled to it because it is viewed as being stable, and right now stability looks good.
Still, I take your point that, maybe in oil it's more of a headwind, maybe in defense it's more of an entry point. At some point, maybe with the valuations, we'll see. When we talk about deregulation, you're watching the housing space for that, although housing feels like a place where why lay your bets with rates whipping around the way they are? But you think there are some companies that can kind of cut through that and do well if there is deregulation? And it's hard on the local front, isn't it? It's hard to do kind of national deregulation of housing.
Yeah, I think we're getting a political consensus on the need to build more homes, and we're getting a consensus that what stopped us from building homes is regulation. People point to the fact that Houston has falling rents while California has very much rising rents. And so I think for the first time actually in my lifetime, we're getting a consensus on that. And I think we're going to see a real push to reduce the barriers to new housing. There's just no doubt that we aren't building at the levels that we did historically, and that we have a real housing shortage in this country. There's pent-up demand. That's just not debatable. So some of the names we like, carpet makers like Mohawk, thermostat makers like Resideo, we think are very attractively priced, and there is pent-up demand.
Carpet makers and thermostat makers. That's how you play Trump 2.0.
There you go.
That's the line. Charlie, thanks. As always, appreciate it.
Thanks,
Charlie Babrinskoy with Ariel Investments.